Good morning, ladies and gentlemen, and welcome to the WOODBOIS Limited investor presentation. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated in the right-hand corner of your screen. Simply click Q&A, scroll to the bottom, type your question and press send. The company may not be in a position to answer every question received during the meeting itself. However, the company will review all questions submitted today and publish responses where it's appropriate to do so. These will be available via your Investor Meet Company dashboard, and you'll be notified once they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Paul Dolan, CEO, and Carnel Guides, CFO of WOODBOIS Limited. Good morning.
And thank you everyone for joining us. I really do appreciate that your time is valuable. So we've kept today's presentation very direct and to the point. I'm really happy that co-presenting with me today, I have Carnel Guedes, our Chief Financial Officer. Carnel has made a major contribution to the successful turnaround of this company. The presentation's in two parts. Firstly, a financial review of the first half of 2021, which Carnel will take you through, and then I'll walk through 6 specific areas of focus for the business. So the presentation will make clear that number 1, we've built a strong platform for future profitability. Number 2, we continue to build an attractive portfolio of increasingly important biological assets. And number 3, our business involves the supply of green construction materials, which we expect to become an increasingly relevant sector as the world begins its necessary transition to a net zero carbon economy. I'll now hand you over to Carnel to introduce herself, for those of you who haven't met her before or heard from her, and to take you through the financial review. Carnel.
Thank you, Paul, and welcome everybody that joined today. As you can probably tell from my accent, I'm born and bred in South Africa, and Cape Town is where I currently operate from. So I understand the situation in Africa pretty well. I joined the company in 2016 and I was appointed to the board in 2017. Before that, I had a life as an auditor. I did my articles at BDO. It's the 5th largest audit firm in the world. I'm sure you're all very familiar with BDO, as it does have a presence in the UK too. And I became a partner at BDO. I spent 5 years of my life at BDO in the UK as well, where I did some work in forensic services. And then I returned back to Cape Town in late 2012, where I ran what is still today the largest pomegranate farm in South Africa, and I'd helped to set up that farm in 2008. So on to today's presentation. I've structured the presentation into 2 sections, a profit and loss section and a balance sheet section. I won't be speaking about each and every line item as it appears in our interim accounts, but I'll really just be taking you through some of the highlights or important areas. So Paul, if I could have the next slide, please. Okay, I have represented the numbers in 2 bar charts. So the first bar chart shows H1, or all of the bar charts really shows H1 2021 numbers against the H1 2020 numbers. And the current year is represented as a dark green bar, and the prior period is represented as the light green bar. So let's get to the numbers. Our turnover for H1 2021 was on par or slightly below the H1 2020 numbers. But what is important for us is the fact that our profitability has doubled. Our GP percentage moved from 10% in H1 2020 to 20% in H1 2021. So how did this happen? Well, increased pricing, which you'll read a lot about in the press, for our product has increased or has played a small part in this uplift. I say a small part because shipping prices have also increased dramatically, so there's some offset between these two. The biggest factor that led to this increase is really the mix of sales between our own production versus sales of third-party produced stock. The mix has shifted in H1 2021 in favor of our own production sales, where margin is much higher. In 2020, 27% of total sales was own production sales, and in 2021, 42% of total revenue was own production sales. So on the third party front, we've also been very selective regarding which trades we do. The new software that we have developed has allowed us to evaluate and select only the most profitable trades to do. Moving on to operating costs, we've controlled these costs really well in H1. We've reduced our spend by 36% between the 2 periods presented. The saving is as a result of nimble operating plans in place in our production nodes, where we are able to react quickly to any disruptions, but also as a result of strict spending protocols, which we had put in place about 18 months ago. There's also been some impact of new machinery and a program of preventative maintenance, which has led to production efficiencies. Finance cost, this is reduced significantly, by 87% to be exact. As you can see, the effect of the fundraise and the restructure done between August 2020 and May 2021 is now very clear. In the final chart on this slide, you see an achievement which we as a management team are very proud of. We've delivered the group's first positive EBITDA and EBITDAS numbers in a challenging environment. Now the next slide, please. Here we look at some of the balance sheet metrics. We ended the half year with a strong cash position due to the raise we completed in May. But as you are aware, we have very specific plans for this cash. So I expect that we will end the year with a lower balance. Paul will remind you of some of these initiatives in his section. Property, plant and equipment. It saw a large increase between the two periods presented, but this is mainly due to a revaluation done on our land and buildings situated in Gabon. It's our policy to revalue our land and buildings every 4 to 6 years, and that is done by an external expert. The last time we revalued these properties were in 2017, so we entered this revaluation period in 2021. We have spent a lot of money over the last 4 years enhancing these assets in Gabon, and we were very pleased to see this reflected in this valuation. The final chart is about our biological assets. As Paul mentioned at the start of this presentation, we hold an attractive portfolio of increasingly important biological assets, and we intend to grow this base whenever there's an opportunity to do so. In this regard, you will have seen in the RNS that we recently released, and also in the post-balance sheet note that's included in the interims, that we announced that we have acquired an additional 71,000 hectares of forest concessions in Gabon, and we are very excited about the value that this acquisition is going to add to the group. So what's the plan for H2? Well, just ship as much as we possibly can, maintain the increased margins, keep costs under control, and become cash flow positive. Paul, back to you.
So since restructuring the company exactly a year ago, August 2020, the company has clearly made significant progress on multiple fronts. I'm now going to take you through what we're doing in terms of increasing our asset base, enhancing production, applying technology to grow the trading business, entering the market for carbon offsets, waste transformation, and perhaps most importantly, approaching the execution of all of the above with an emphasis on transparency and sustainability. So let's start with the increased asset base that Carnell mentioned. We raised money recently in May, and at that time we said that we'd purchase additional concessions in order to secure sustainable log supply to match the increased output capacity from our factories. Now we delivered on that promise 3 weeks ago with the purchase of the 71,000 hectares of forest, which is located close to our existing operations. And looking forward, we'll continue to look to add to the forestry portfolio in Gabon and elsewhere, particularly if we can find distressed sellers. And why is this so key to our strategy? Well, these forests are a naturally growing commodity. They provide investors with inflation protection, and perhaps most obviously and importantly, they play an increasingly valued role in helping to mitigate climate change. Next, let's look at the enhanced production on the top right-hand side. Through our investment in machinery and people over the last 2 years, our target at the start of this year was to significantly increase our levels of production. Again, I'm pleased to say that the team has delivered with a 120% increase in sawn timber production and a 70% increase in veneer production. We've achieved this through a combination of retooling our factories and bringing in top-class operators to manage them. I was fortunate enough to be able to finally visit our operations for the first time in 18 months in July. Frankly, I was blown away by the improvement and the implementation of first world processes that Olivier Normand, who we've referenced here on this slide, has brought to bear in Wheeler. And looking forward, we're targeting further production increases at the sawmill this year, and we expect to double veneer production in 2022 and again in 2023 from the 2 new veneer lines that we purchased earlier this year. So on the production side, there's a lot to look forward to from what should become a big cash generator for this business. I get asked a lot of questions about trading, so moving on to trading, when we say intelligent trading on this slide, we're talking about applying technology and smart, hungry, tech-savvy people to build profitable market share. Again, clear evidence of delivery here, with margins from third-party trading doubling year over year from 5% to 10%. This is the area of the business, however, that's probably most impacted by the ongoing disruption in freight shipping, which you'll be aware of, and container availability, and we'll need to see that situation normalise before meaningful top-line gains from trading start to feed through. Now, that said, we are in excellent shape with our tech and with our people to really go on the offensive and start growing market share when things eventually normalise. On the right-hand side of this slide, our focus on sustainability. Again, you can see we've brought more expertise into the company in the form of Richard Fiteke to run our forest management and certification. And I really want to be very clear here. This company is absolutely for profit, but it's also highly purpose-driven. We aim to bring value to all of you, our shareholders, obviously, but it's also important to us that we offer value to society at large. Now, whether that's through providing skilled jobs and training, or sustainably managing our concessions, or minimising the carbon footprint of our operations, we all know that population growth and urbanisation are fueling demand for new construction. And we also know that construction is responsible for 1/3 of all global CO2 emissions today. So the transition to timber-based construction to reduce building emissions and to store carbon has clearly already started. After this summer's deadly flooding in Germany and Belgium, not to mention the wildfires that are raging right now in Greece and California, this trend seems really bound to accelerate. And as a provider of green construction materials, WOODBOIS is very well positioned in a really important sector where sustainability is paramount, and achieving certification, which is what we aim to do next, is a really important step for the company. On the next slide, we talk about carbon on the left-hand side, our carbon division. You see the target initially was to assemble a capable, credible team, which we've done. And I have to stress, this shouldn't be taken for granted. Hiring top talent is where a lot of companies of our size tend to struggle. And I think in Carbon Solutions, from first-hand experience, there's huge competition for talent. Now, the next step for this division is massively ambitious. We want to implement a large-scale reforestation project. And by that, I mean more than 20,000 hectares, ideally in Gabon, where we have such a strong footprint on the ground. Our combination of on-the-ground presence in the Congo Basin and the in-house skills required to attract project finance and to structure partnerships with major corporates, I think, is extremely rare. Of course, ultimately it comes down to execution. But if we do manage to execute, this division will provide equity investors with a pretty unique call option on the future price of carbon. If you look around the market, you'll find that very hard to replicate. And while talking about carbon, again, it really comes back to purpose. Our purpose of seeking to mitigate climate change, as well as addressing some of the other UN Sustainable Development Goals, has definitely helped us to attract serious, talented people like Carnell, who you've now met, Olivier, who I've referenced, Mike and Joe that you see on this slide, and many others to the company. And although we talk about our valuable asset base, really our most valuable asset is our people, and we have some very, very strong people within this company. On the right-hand side of this slide, and the last of the 6 points that I'm going to touch on, is waste transformation. So our target here is to improve the levels of recovery of our raw material by transforming more of our waste into a sellable product. So average utilisation of each log currently is around 50%, which means we need to try to find a way to recycle and create value from the remaining 50%. So whether that's through creating power via the installation, for example, of a CHP plant, or manufacturing byproducts such as blockboard or finger jointed boards, or even furniture for the local market. Now, why is that important? Well, because the input cost of the raw material is so low, effectively it's waste today, even if these are relatively low value products, the margins are high and they flow straight to the bottom line, which frankly is in all of our interests. So they're the 6 key areas that I wanted to update you on. We have some time for Q&A, but before we go into that, I hope from what you've seen and heard from both myself and Carnell, it's clear that the platform really is there. It's been built for future profitability. We have a really attractive portfolio of increasingly important biological assets. We're clearly operating in a sector that's going to be front and centre in the transition to the net zero economy. And we've developed our organisational capability by building a lean, motivated, fit-for-purpose team. And I'll now hand over for the questions.
Fantastic. Thank you very much indeed, Paul. Thank you, Carnell, for the presentation. Ladies and gentlemen, do please continue to submit your questions using the Q&A tab situated on the right-hand corner of your screen. But just while the team take a few moments to review those questions submitted, I'd like to remind you the recording of the presentation, along with a copy of the slides and the published Q&A, can be accessed via the Investor Meet Company platform. I'd also like to remind you that your feedback is important to the company, and immediately after the presentation has ended, you will be redirected for the opportunity to provide feedback in order the company can better understand your views and expectations. Paul, Carnell, obviously we've received a number of questions, and perhaps I could just start with the first one, if I may, just read it out to you. And I think one addressed to you really, Paul. With so much growth and expansion planned, how will the board be addressing the lack of senior executives to oversee a competent execution of the company's strategy? Where does the key man risk lie?
Okay, I think 2 questions there, and they're both highly pertinent. And the person that's asked the question, sorry, I don't have your name, but look, you're absolutely right. In order to execute such an aggressive growth strategy, and it is aggressive, we're going to need additional executive firepower. There's no question, and we're absolutely in the process of looking for both executive, actually, and non-executive talent to help us. In terms of key man risk, the most obvious areas are clearly, hate to say it, but myself, and also our deputy chairman, Hadi Ghassain, who's based in Gabon. But nobody should be irreplaceable, and we do have some really strong people coming through the ranks.
Fantastic. Thank you very much indeed, Paul. Next question we've got here. Paul, has the situation improved in the supply of containers for export? I know we have touched on this, and also is the order book in a healthy state going forward, and how far ahead is the company working to? Okay,
sounds like 2 questions again. So let me take the containers first. Look, availability of containers and shipping routes, it's changing on an almost daily basis. So that puts the onus on our logistics team to be in constant communication, not just with preferred suppliers in terms of the shipping companies, but all of the shipping companies that ship to and from, or from the ports that we use to export and to destinations, to ensure that we can continue to deliver product. But we really haven't seen any improvement in the situation yet, and the headlines are there, every day, not just in the FT and the Economist, but in mainstream press as well. Now, the question, there was a question on order book as well. Well, our order book remains full for the next 5 months, and that's as far in advance as we typically like to accept orders. Yes, it's full.
Fantastic. Thank you very much indeed there, Paul. Next one we've got here, as regards the carbon credit market, how are things progressing here? Also, as regards financing it, you previously said it would be done via other means and not company cash. Will there still be a lucrative proposition having to get financial backing elsewhere?
Yes, look, hopefully I've covered some of the questions that people have on carbon within the presentation. In terms of the current status, the government of Gabon has requested that we submit a comprehensive feasibility study by mid-October. in support of our large-scale reforestation proposal. And of course, we're currently working on that. I can't really offer any guidance on timing beyond that regarding when any grant of land might be made. But I suppose what I'd point out is that we're really fortunate to work in Gabon, where the landmass is bigger than the UK, but there are only 2 million people, and you have 3 meters rainfall every year and sunshine most days. Trees just don't grow any faster anywhere on this planet. And we don't have the problems that you have in other countries where you're competing for land with people.
Thank you. Yeah, very much indeed, Paul. Next one again around carbon credits. Next couple actually around here, but if there is anything further you can add as regards the carbon credit market part of the business, how long will it take to establish? And also, when do you see this part of the business generating income going forward? And I think that's a little bit of an extension of that question there.
Yeah, I think that maybe the two questions kind of run together, and perhaps I didn't address the point about financial backing. And again, I want to make clear that this is we're talking about a large scale project. I mean, the cost we'd expect to run to more than $100 million over a 10-year period. So we're going to need corporate partnership or corporate partnerships to help fund that. Clearly, in return for a share of the credits. Now, a proportion of those credits will also go to the government. To answer the question about when do we see it generating income, really the forward solar credits is what funds the project, but meaningful income I think comes as trees start to mature and increase their mass, and that's really after year 6. But you're talking about a 30 to 40 year life of this project. This is really not short term, but it's something that can pay a phenomenal annuity in the years ahead.
And Paul, I guess just touching just on the final, another question we had in just around that carbon credit market and how much interest you've had from potential clients. Obviously, we've just talked about a bit of funding there. Whether you can say anything further on that basis.
Well, I can confirm that there's interest. Yes, I suppose what I'd say is, look, finding willing corporate partners is probably the least challenging part of the process, and that that's really not going to be a surprise to anyone who's been looking at the activity and the price action in both the regulated and the voluntary carbon markets over the last 12 months. People are really looking for these projects and access to credits at scale.
That's fantastic to hear. Thank you. The next question we've got, perhaps I can address this one to actually you, Carnell. It reads as following. I myself import and export containers on a regular basis. I'm fully aware of the shipping price hikes as regards to this. Are the profit margins still going to be good as regards this going forward?
Well, we worked very, very hard to get the margins where they are, and we're working as hard, if not harder, to try and protect these margins. So there's a lot involved in doing that. So we're in continuous dialogue with the shipping lines, with our customers, with the suppliers, to see where we can get the best rates. So we don't only use one shipping line, we use them all, and we shop around. We speak to the customers and suppliers to see whether it makes sense to maybe change how we book the journeys, whether that be at destination or at origin. So really a lot of work involved in making sure that we absolutely get the best rates possible. And then where there is an increase, we speak to the customers and the suppliers to see whether there's any sharing of these costs that we can do. But I mean, it's extremely volatile, and it really is on a daily basis speaking to all the parties involved to make sure that we absolutely get the value out of these trades. And where they don't make sense, then we would rather just prefer not to do the trade. So I think for us, there would more likely be an impact on turnover, where we just won't do a trade if it doesn't make sense, rather than to erode the margins. So yes, hopefully we can protect these margins to the end of the year and beyond.
That's fantastic. Thank you very much indeed, Carnell. Perhaps the next one as well, if I could pop that one to you. Are you still optimistic that at some point next year you will be able to pay a dividend? And also, will you be doing a Q3 and Q4 update later this year?
We said we would pay a dividend next year, and we like to do what we say we would do. So yes, as I sit here today, it is still our intention to pay a dividend next year. It will only be announced with our results next year or after the release of those results. So obviously it is still dependent on those results, but yes, as I sit here today, that certainly is the intention. Regarding updates, we've released quarterly updates every quarter now, I think for the last 4 years, in good times and in bad times. So yes, we will be putting out some updates in Q3 and Q4 as well.
That's fantastic. Thank you very much indeed. Okay, the next question we've got is kind of a long one, and perhaps before I can pop that to you, actually, it's all about the sustainability policy. I've read the annual sustainability policy transparency toolkit, SPOT. In fairness to the company, it's made great strides to be listed in the top 10. I see we're joint 6th place with only a few percentage points separating us between moving either way. I would just like to point out a few things that those above seem to score highly better on than us with this regard. One is climate risk assessment available, natural capital assessment available. Also, another 2 scores that don't really score that highly are certification standards and smallholders and supplier scores. Are there any plans in place to maybe address these that could affect our current position?
Yeah, what a great question, and you know, to the questioner, thank you for taking the time to read the SPOT report. And there are several parts to this question, I think. But I would say third-party verification covers the vast majority of the areas that you've highlighted, and you know, you saw in the presentation that as we look forward, achieving that certification is a huge area of focus for us. And to that end, we've hired Richard Fiteke as our ESG manager on the ground in Gabon to make sure that we're actively pursuing all of those work streams. So we're currently working on legal source certification. That's the first step towards FSC certification. And then FSC will require us to do the climate risk and natural capital assessment, assessments that you ask about. So both assessments are part of the company's plans over the next 18 months. We've got little or no exposure to smallholders, and of course vetting our suppliers is an ongoing iterative process, and I think that covers off all of the different points that are so well made in the question.
Thank you very much indeed, Paul. The next one we have here is, Paul, with the fundraising done in May and the investment being made across the business, once we're generating cash, do you see WOODBOIS making any further purchases as regards to expansion?
Yeah, well, I love that question. And to answer it with a single word, I'd say yes. But let me add to that a little bit. Anyone joining this company that doesn't have a growth mindset doesn't tend to last very long. You know, we're an ambitious crowd here, and we want to grow to become a major player in the space. So, you know, whether that's organically or through acquisition.
Fantastic. Thank you very much indeed, Paul. And I think that's covered off. We had several questions about that, so thank you for covering off that so succinctly. Just to say, you know, we've just gone through that half an hour mark as well, and we have covered off, I think, the vast majority of questions. But just if there's anything perhaps I've missed there, guys, or if not, Paul, if I could just ask you for a few final words to wrap up before we redirect the attendees to give you some feedback.
No, I'd look, just once again that we really do appreciate your time, taking the time to look into us as a company, taking the time to listen to join the presentation. We do welcome questions. As I said, sustainability and transparency are really, you know, very much in our DNA and at the heart of what we do as we try to, you know, I think we've built quite a strong investor base already. And we know we need to engage to strengthen that further.
Fantastic. Thank you very much indeed, Paul. And of course, any further questions that do come through, the team will have the ability to review those and publish responses where appropriate to do so. Paul Carnell, thank you so much for updating investors today. Could I please ask investors not to close the session, as you'll be automatically redirected for the opportunity to provide your feedback in order that the management team better understand your views and expectations. This will only take a few moments to complete and is greatly valued by the company, as Paul has just said. On behalf of the management team of WOODBOIS Limited, we'd like to thank you for attending today's presentation. That concludes today's session. Thank you and good afternoon.